It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast on another weekend that is here as we inch ever so closer to the Christmas New Year break. It's Real Estate, yes, breaking down the numbers and the trends for you every morning. What a year it has been, eh? So much to talk about. It's a Saturday, December the 6th, and I see that Sydney's most sought-after one-bedroom apartment, one of only two buildings with direct road-free access to Bondi Beach, has sold for an impressive $1.79 million, soaring more than $200,000 above its price guide. The apartment, widely regarded as Sydney's most in-demand one-bedder, continued the trend of premium beachfront homes selling quickly and strongly. It was listed for an auction this month, but it has sold, way too quickly. In fact, it sold last month. So, yeah, it just goes to show premium properties, we know they are selling and selling fast. Let us know too, just in terms of how you're looking forward to the Christmas New Year period. Let us know where you're off to. Our email address is myrealestatepodcast@gmail.com. And very shortly, we're going to take you to Sydney and catching up with Anthony Landau, the Managing Director and Mortgage Broker at Equilibria Finance. Yeah, 2025, it has delivered us rate cuts, new government guarantee schemes, and a market that just keeps on building momentum. And whether you're a first-time home buyer or planning an upgrade, the challenges of getting into the property market are as confronting as they ever have been in the past. With the year drawing to a close, it's the perfect time to reflect on another very, very big year in the Australian property market. Anthony Landau, I bet you would have loved to have got your hands on a one-bedroom apartment, in Bondi. If you could go back 10 years, grab yourself a bargain all the way. Good morning to you.
Yeah, good morning. Great to be here on this December weekend. And wow, that's just crazy and reflects the challenges of the Sydney housing market. A one-bedder going at that sort of price is just really, really difficult for so many people. But there you go. That's where we're at.
And then, of course, we've also got coming up on Tuesday, is it? The RBA.
RBA meets next week. Very, very interesting times. There's even some talk from some economists of a rate rise in December or first up next year in February. So we'll wait and see.
Yesterday also, the government's Help to Buy scheme. How much of a take-up do you think we're going to see with this, and what impact could it have?
Effectively, it's a shared equity initiative with the federal government, which enables people to get into a property with a deposit as low as 2%. The government's hoping it will open up opportunities for about 40,000 new home buyers. I'm not sure about what the participation will be like. The take-up for the first home guarantee scheme's been very strong. These sort of schemes drive demand, which ultimately drives prices. It'll be interesting to see the take-up, whether it's as strong as other programs, but the government's hoping for 40,000 places.
Now, one of the big things this week is Domain has got their end-of-year wrap-out. We talked to Nicola Powell from Domain a couple of days ago. One of the big takeaways is the increase in borrowing capacity this year and the price growth across the year. She had this to say.
Those rate cuts finally came to fruition in 2025, and what we saw is obviously improved borrowing power. When you look at the 3 rate cuts, so 75 basis point in rate reductions, that means your average dual income household had borrowing capacity increased by roughly about $74,000. But this is the paradox of affordability, because we saw borrowing capacities increase by $74,000. But what we're expecting by the end of the year is a 9% increase in house prices, which is a $99,000 increase in house price across the combined capitals. What we have seen is house prices have risen faster than what borrowing capacity is improved by.
Yeah, the borrowing capacity, that's something that you would have really been deep in the weeds over, I guess, as those interest rates came down, Anthony, and just gave people that opportunity with more money to buy.
Yeah, we've seen firsthand the real impact where the rubber hits the road. I mean, we've seen borrowing capacities go up 5-10% depending on particular circumstances. That might be $100,000, $150,000 in some cases extra borrowing capacity, bearing in mind the market grew nationally at 8.5%.
Yeah, and Domain also said that while confidence returned, affordability barely moved. Prices continued climbing through an 11th straight quarter of growth. This was fueled by population pressures and limited supply. Buyers really didn't step back. They adapted as they do every time, embracing flexible options. You know, one of the flexible options is this multi-generational living. You know, people getting into the granny flats, and you've got an example of a client who is splitting a house in two and getting into exactly that.
Yeah, with affordability biting, particularly in Sydney and some of those higher end markets, people are looking at other ways of getting into the market. Right now, we're helping a client essentially split the family home into two. Mum and dad will be upstairs, family and children will be downstairs. They'll buy an equity stake in the house and do the renovations to essentially afford to be able to live where they want to live. So it's becoming more common, those sort of conversations and people doing that.
Yeah, certainly one of the big stories out of 2025. Let's talk about APRA's new debt-to-income lending limits. What has prompted this shift?
Yeah, look, APRA just recently announced, and I think it's mainly around growing levels of debt for some households. They're just putting some limitations on high debt-to-income lending, essentially capping 20% new mortgages 6 times their annual income. I mean, that number itself's mouth-watering. It'll mainly impact the majors who look at those higher risk loans. So it might just slow down some of that larger lending where people are really trying to borrow as much as they can on those higher incomes.
We are talking to Anthony Landau this morning on our Saturday Property Show. When we come back, we're going to talk about some of the biggest forces that has shaped our 2025 housing market and also look ahead to next year. That is next.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
Nick Dunn from McGrath is joining us. Now, you were in Willoughby. Just tell us a little bit about Willoughby and the makeup of Willoughby.
Yeah, Willoughby's a pretty big suburb. There's a suburb of about 3,500 houses. I think that the population probably is sitting just under 20,000 people. Well, that's as an LGA. It's predominantly made up of houses, good local Australian families, but also over the past probably 5 to 7 years, it's really attracted some pretty strong foreign interest from the Asian markets, the Chinese in particular. We border on the suburb Chatswood, which has a strong sort of connection to the Asian culture. So great suburb, ease of access into the city, nice flat blocks, and all in all, a good family suburb.
You're just talking about Chatswood and that linkage into the Asian market. Just how strong have you seen that Asian market for 2025, those migrating in?
Yeah, it's big. I mean, I was listening to a podcast the other day and I think they were saying, migration into Australia and New South Wales in particular has doubled over the past 5 years. And we've certainly seen it across the lower North Shore, but particularly in Willoughby. As I mentioned before, Chatswood's got a really strong connection to the Chinese culture. And a lot of people like to call Willoughby home. So it's been, very strong, the interest both locally from, local Australian families, but also there's a strong cohort of the Asian market that are both grown up here, but also a lot of sort of migrating across from mainland China to call Willoughby and Chatswood home.
Now, let's have a look at the median house price for 2025. Where is that at the moment on the dial?
Yeah, interestingly now it's sitting just north of 3.5 million, which has seen a fairly substantial jump from last year. It's gone up about 7 or 8%. So it was sitting around the sort of 3.250 mark, but now it's around the 3.52 for a block of land or a house.
You're listening to the Saturday Property Market Update.
And it is a Real Estate Saturday. Chasing property. Yes, not much time left if you're looking at transacting between now and the big day, 2025 December. You're not going to get into the property, are you? That's out. But anyway, you might be able to get into the property into the new year. Anthony Landau is with me. The biggest forces, you've got some of the key talking points that have shaped our 2025 housing market.
Yeah, 2025 is ending with a head of steam. As you touched on, the market grew another 1% in November, down slightly from the previous month, but still growing. Nationally, we've seen growth of 8.5%. Main three influences were obviously the big ones, interest rate cuts. We started the year with a cash rate at 4.35%. We're now with a cash rate of 3.6% leading into the RBA's meeting on Tuesday. That's 75 basis points. That's enabled borrowing capacity. The other big thing it's done is it's brought investors back into the market. The other thing we've seen in 2025 is demand-driven initiatives. We've had the government guarantee scheme, which was rolled out a couple of months ago. We've had the Help to Buy scheme, which was rolled out yesterday. All of these things have driven demand across the market. The biggest issue in the market is nothing is addressing supply. Sydney, Brisbane, Adelaide, Perth, Darwin all end the year with new record median prices across units and houses.
Yes, lots of increased median prices. That's been another big talking point for 2025. We should look at next year. I am a little bit nervous when you talk about maybe the rate rise could go up instead of down, or even stay in pause mode on Tuesday. But we will be bringing you that on Tuesday the 2nd, that drops. Just a quick mention, if you are not already following us, make sure that you hit the subscribe button, because you will get that information instantaneously. Some of the key factors set to influence property next year. What do you think, Anthony?
In terms of 26, look, I think we're going to still see ongoing growth, but I think the rate of growth will slow. There's now some uncertainty about interest rates, and that will influence behaviour. Whether rates remain at the current cash rate of 3.60%, or in fact whether they go up on the back of the inflationary numbers that are coming through and the concerns around that. By virtue of that, I think that will slow down some people's ambition and slow down some people's behaviour. The big elephant in the room is I think supply is going to remain tight, and that's really keeping the market ticking along. So even if we see a slowdown in some of the behaviour and some of the people out on the market, by virtue of the fact supply and stock is going to remain a challenge. New stock on the market, we can't get the buildings up, we can't get the construction done. Downsizers not downsizing, people holding on to their properties, all impacts supply. We're probably looking at growth maybe of 5 to 7%. 2025 was 8.5%. So good, strong growth still, but I think the rate of growth will slow next year on the back of those two things I mentioned.
All right, we'll wrap it up there. I'll let you get the surfboard and go out for a surf this morning. Anthony, you enjoy Saturday and your weekend. Look forward to talking and catching you back just before Christmas. We'll talk again.
Looking forward to it, and we'll chat Tuesday, hot off the press with the RBA.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
The time that I was checking these figures last week, when the median price in Penrith was $980,000, that was for a house. That was the same median price for a unit in the city. And the unit price in Penrith, the median price was $570,000, and that's gone up $5,000 in a week to $575,000.
We've been talking about the rise in the unit market, not just since the 1st of October. Really, we've been talking about this unit market all year, but now the blowtorch has been applied even more by these first home buyers everywhere right around the country, including Penrith. This is obvious to see.
With Sydney, even a house median price of $1.75 million, a lot of buyers will talk about it's not fair, they can't afford to buy, but it's where they want to live, whereas they can afford to buy out here in Penrith and maybe buy it as an investment property and get your foot in the market.
We connect you to the best real estate information across Australia. The Real Estate Podcast.